Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday, it's the 18th of September. My name is Stratos. I'm a senior market specialist at FXCM, and my email address is rshore@fxcm.com. Just going to go ahead and bring up our disclaimers, and we'll start off with the high risk investment warning, and I'll keep this on screen for a few moments. Good morning, Kim. Good morning, James. Pleasure to have you on the webinar. Thank you for joining. Thank you, everyone, for signing in this morning. Much appreciated. Hey, Howard. Had a great weekend. I hope you did as well. All right, let's just bring up the market commentaries disclaimer. I'll keep that on screen for a few moments. And just our references, MarketScope and TradingView. All right, let's just go and take a look at the real rate. And this is the daily. Yeah, it does look as if it's spiked and then has pulled back today. And what we want to do is just take a look and see how that is affecting the US dollar. Hey, Derek, morning to you. Welcome. Nice to have you on the webinar. So again, what we want to do is we just want to take a look at the real rate and measure the movement in the US dollar relative to the real rate. And what the real rate is doing, it's looking at interest beyond inflation. So here we're looking at the real rate after taking into the account inflation is at 2%. That's quite constrictive. It's quite constrictive. It's probably, I would expect, dollar support. What we're going to do is we'll just press the plus button, and what we want to do is just bring in the US dollar underneath that, and let's take a look. All right, so we're looking at this on a daily. The fact that it's pushed up, when I say it, the real's pushed up and come down, it's just putting a little bit of a dampener on the US dollar. Let's take a look at this in more detail on MarketScope. So let me just bring MarketScope over, and let's just change this up to the US dollar. Okay, and starting from the weekly, what we can see is we have a higher trough followed by a higher peak here. I think let's just make these a little bigger so it's easier on the eye. Just want to see if there's some comments coming in. No, we're all good. All right, I'm just going to make it 11 font. And we'll set that as the default. It should come in a little easier on the eye. Okay. So yeah, higher trough followed by higher peak. And then again, what we want to do is get a feel for the momentum. And what we can see here is it's on the positive side of 50. It's on the top side of 50. So dollar still very much supported. But let's take a look at last week's price action. Right, last week's price action, I think, is quite instructive. It is effectively this candle over here. We're looking at this candle, and what effectively happened over the course of the week, if I have to put in a let's put in some axes. Okay, and what we're doing here is we're going to see it opened, and then it promptly sold down. The dollar sold down for the week until it hit the low of the week. And at the low of the week, who's in control at the low of the week? The bears are in control, right? But the low of the week is as far as they can take it. That's where they lose control to the bulls. The bulls push price up, and it actually closes slightly higher than the open. That's why we've got a blue real body. So who's in control at the end of last week? Who's in control? So the week ends with the bulls in control for the dollar. And if we ask ourselves why, well, we can see that. Let's just take a look at this on the weekly. We had a blue candle for the real rate, and it really took the dollar up. So the real rate very much, specifically from, I'll say, the end of April, I mean the end of July, beg your pardon, very much a driver. If I take a trend line, it's moving up there. And it's moving up there. So real rate, we starting off our analysis, taking a look at the real rate. It seems that the bulls are in control at the start of the week. Nothing really, no real price action to dissuade us from that. But then on Wednesday, we're going to have the FOMC. I don't think that the Federal Open Market Committee is going to raise interest rates, but I think that the press conference is going to have a bullish tone. I think what Fed Chair Powell is going to say is that inflation is still not under control, and I think basically the higher for longer theme gets carried through, and I think that's why we're seeing dollar react as it is now. If the dollar is starting off the week potentially with the bulls in control, what's going to be happening on the other majors? So let's go through, let's just take a top-down analysis of the US dollar, then we'll go through to the euro US dollar. So if we take a look at the dollar chart, it's in zone 1, is between the upper blue and the upper red. Okay, that's our bullish area. As long as we're in the bullish area, the bias is to the upside. Okay, take a look at the RSI. As long as it's over 50, the bias is to the upside. Okay, so again, there is a synchronization between the US dollar daily and what I would say the US weekly is showing us. But there's a little bit of red that's coming, a little bit of red. So I think that we've got the potential dip in the uptrend. So let's go down to the dollar hourly. And what we want to do here is just keep an eye. Let's take this out. Let's take this one out. What we want to do is we want to keep an eye on the S1 and central pivots. I think the S1 central pivot is a support area. So let's put in the rectangle. Okay, so some support coming in around this area. It's a thick band of support. We're right in the midst of it. And if there is the central pivot S1 level, if that's where we are, and if the daily is in the zone 1, and if the weekly is telling us that the bulls are probably in control, then we want to see the EMAs cross to the upside. Okay, so we want to see the green 5-hour exponential moving average, cross above the orange 10-hour exponential moving average, and develop that angle and separation to the upside. We'd also need to see the stochastic crossover to the upside. And if we get those two triggers, then the momentum is what we're relying on. Well, the momentum really takes place in the upper quintile. Okay, so we're going to look at the euro now, but I just want to reiterate what we've seen here. We've seen the weekly, and we looked at last week's candle. We've really delved into what last week's candle is telling us, and it's telling us that the week ended with the bulls in control. We're above the 30-week moving average, and we're above the 50. The daily chart looking bullish. Now we're looking to see if we're going to get some sort of bullish timing signal on the hourly. And this is on the US dollar. If this is happening on the US dollar, one would expect the majors to become under pressure. Let's take a look at euro. Okay, go through to the weekly chart here. What do we see? What do we see on the weekly chart? Lower peak, followed by the lower trough. I still think this is a bit small. Let me just make this a little bit larger. Just make it a 14 font. Yeah, that's better. That's much better. It's below the black 30-week exponential moving average. What direction is that exponential moving average? Is down. So we apply the direction filter to the moving average to get an idea of which side the pressure. So pressure looks to be to the downside here. Okay, take a look at RSI below 50. Okay, so weekly looking as if it's pressured. Not only if it's looking pressured, it's on the other side of the US dollar analysis. Let's go through to the daily chart. Okay, which zone are we in? We're in zone 3. Zone 3 is our bearish area between the lower blue and the lower red. The lower blue, lower red. And then if we go through to the hourly, look what's happening on the hourly here. It actually looks like it's starting to cross over. This is an interesting looking chart because it does seem to be quite bearish. I want to just show you guys what I think is happening here. We've got a 1, 2. Okay, that's the impulse. 2, 3 correction. And then if we get the next impulse down, you know, that's something that's potentially tradable. Are we going to get that? I don't know. Nobody can predict. Okay, so that's why we use stop losses. That's why we use money management. Okay, but we try and effectively catch the rallies when we're in downtrend. So it looks like we potentially have that. What we need more angle and separation in the EMAs. They've crossed over, but we need more angle and separation there. And we really need the stochastic to make its way through to the lower quintile and hold. If we make it through to the lower quintile and hold, we've got more of a chance of a swing. See here, it makes its way to the lower quintile and holds. That's where the impulse move takes place. So you can see the euro does seem to be a mirror image of the US dollar. Let's take a look at cable. Something that I just remembered, Mohan asked me to go through the settings. I think Mohan, what we'll do is we'll go through the settings tomorrow. So if anybody wants to know the settings of the indicators that we use, we'll do that tomorrow. All right, let's just take a look at pound US dollar. Let's add that through. And again, top-down analysis. Top and then we'll go down. All right, we'll go through to the weekly chart here. Now, we don't really have a trend with the weekly. Remember, trend is determined by a lower peak followed by a lower trough. That would be a downtrend, or it would be a high trough followed by a higher peak. We only got, as far as I can tell, we've only got 2 points here. Okay, we've got the peak, the trough. It looks to be sort of an impulse down. What I can say, it's below the 30-week moving average, and the 30-week moving average is turning down. And I can say that the RSI is below 50, so it does seem to have that bearish tilt to it. So if we've got that bearish tilt to it, let's take a look at the daily chart, and lo and behold, it is in zone 3. Okay, so we've got it between the lower blue, the lower red, and we've got the RSI below 50. We've got to just watch this. It is starting to tend towards an oversold level. We're not quite there yet, but we do have some blue. So perhaps another rallying downtrend here. And again, what I think we should be looking out for is, well, we've got, we're at a resistance area. Okay, here's the support turned resistance. Okay, that's at the central pivot. And I think the next thing that we want to look out for is for a cross down to see if that happens. Do we get the cross down? And just want to bring that to the forefront. Okay, do we get the cross down? We don't quite have angle and separation. The green is below the orange, but that's only one of two triggers. The second trigger hasn't been pulled yet. Okay, so we want to just see if that we want to just see if the stochastic rolls over as well. If it does, we'd like to get the stochastic into that lower quintile. All right, let's just do two more. I'd like to take a look at gold, and I'd like to take a look at the DAX. Let's just go through to gold. And gold generally moves in an opposite direction to the dollar. What's interesting here is that it is actually being supported. That worries me. If the dollar's moving up and gold's moving up, to me, that is not normal price action. Typically, they would diverge in the way that they move. So Kim asked a really good question last week. What's driving it? Is it the dollar, or is it the demand for gold? So I would suggest that the demand for gold is pulling the gold price up here, as opposed to the US dollar really driving it. But what I would suggest to you is just to exercise caution when it comes to gold. That's because it's very rare for gold to move in the same direction as the US dollar. In fact, what we do have here is a lower peak, and this is a lower trough here. I can put in a lower trough here. Okay. But we are above that 30-week moving average, but the 30-week moving average, we haven't got the direction filter yet. So to me, just be careful. It looks as if we're moving sideways for the time being. In fact, it looks as if we've got a lower peak over here, and looks as if we've got a higher trough there. And if that's the case, if we've got a lower peak followed by a higher, and then we've got a high trough there, we've probably got something like that, some sort of triangle consolidation on gold. So just be careful with the gold price. Let's just bring it up. It's in no man's land. Okay, the fact that it's in no man's land is already telling us, well, we don't quite know which side it's pushing towards. It's not in zone 1, it's not in zone 3, it's in zone 2. Perhaps we give this one a little bit more room to breathe. What's interesting is that the DAX seems to be pretty closely related with gold demand at the moment. Let's just bring up DAX and just see how that is tracking once we've looked at the gold price. We've also about 7 minutes after the cash open. So DAX been open for about 7 minutes. We've got the support over here, which is what gold's got. Gold's got an underlying support, but it just seems to be lagging direction. It's for 1, 2, 3, 4, 5 weeks we've been moving sideways. It is above that 30-week moving average. The 30-week moving average showing some slope, and the RSI pushing above 50, albeit very slightly. If we go through to the daily chart here, we're not really conclusively in zone 1 yet. On Friday, it pushed right into zone 1, and then it got pushed right back down again. I think with the DAX, like gold, is probably something we want just to have a little bit more patience with. Again, zone 1, zone 3 is really where the action happens. I would label this as zone 2 for now. I need a little bit more from DAX. So gold, DAX potentially sideways, whereas dollar showing a little bit more flair for action, a little bit more bias, and I think that's rippling through to the other majors. So keep that in mind for today's market sessions. All right, I think that's as far as we'll go for this morning. If there's any questions, just go ahead and type those in. We'll go through the settings of the indicators tomorrow morning. Okay, we'll go through the settings again tomorrow morning. All right, guys, we'll wrap up here. Have a great day ahead, a great evening. Chat to you guys tomorrow morning.